the level that Nifty is standing right and tall right now. And while for Nifty Bank as well, we have seen good gains from those lower levels. But what should your strategy be like in the last 1 hour of this trading session? We'll try to decode all of that in closing trades right here on ET Now. And yes, of course, it's been an earnings heavy day and the reaction as well, because from the start and the word go, we have seen the financials taking the leap, as well as ICICI Bank and HDFC Bank. Those heavyweights have been lending supports to the benchmark indices. But index management is all throughout is what we have seen throughout the day, because heavyweight Reliance as well, that stock has been tanking since the start of the day and still sitting on to the losses of 3.5%. But despite this fact, Nifty is up in the green, and so is the Nifty Bank. What we are seeing that is doing well today is actually Eternal. Very good move coming in on this counter as well, just ahead of its earnings. So that's what we are watching out for. But on the flip side, select financials, select IT names, they are the ones they are reeling a bit under pressure. The breadth of the market is quite even, Stephen, while India VIX has declined almost a percent as we speak right now. But yes, of course, it's metal pack, it's chemical basket that has been doing well, and they have been doing well rather from the last week as well, and the movement continues today. And one of the other stocks that is in focus is actually Ultratech Cement, that did come out with its earnings. And this time around for Ultratech, what we have seen is a decent set and an okay set coming in, because a slight miss on the margins, a slight miss on the profit is what we have seen for Ultratech. While in terms of the consolidated volumes, the company has seen a jump of 9.7% versus the street estimate of 14 to 15%. So a bit of a decline over there, a bit of a miss rather on this particular number as well. But in terms of the realizations, a 2% jump is what we have seen on a YY basis, while in terms of EBITDA per ton, the number has seen an improvement, not just on a sequential basis but also on a YY basis. So that's why Ultratech, one of those companies which reacts very sharply on its earnings, for now is sitting absolutely flat in the trade. But Snehi, apart from Ultratech, there are indeed a lot of stocks that are making into the news.
Absolutely, Shrishti. What a stock-specific day we've had today, like you mentioned, in terms of earnings. We've seen some auto wins in some of the railway counters. So very news-specific action is what we've seen from some of the stocks today in the market. We spoke about Reliance Industries and how the stock is down and out, but despite that, the Nifty is managing to hold on to some shade of green right now. Other than that, the stock that's under immense pressure right now is CEAT, the tire company, because Avendus Spark has downgraded the stock to reduce from buy and also cut the target price to 2,500 now compared to 3,875 earlier. Remember, this is the overhang of the earnings that we're seeing on CEAT, because numbers came all the way back on Thursday, and ever since then the bearish stance of brokerages continues and the stock continues to be under pressure. That stock lower by about 6% as we speak. Also, what's not doing all that well today is MRPL, weak set of numbers post market hours on Friday. They've logged in a loss this time around versus a profit this time last year. So MRPL also under quite some pressure as we speak. L&T Finance, another stock that's gaining in trade after results. Now this is on the positive side, because the management, we interacted with them, the numbers look good, and we also interacted with the management wherein they said that the second half of FY26 is expected to be a good period of normalization all across the industry. So that is some good word coming in from the management. And not only is the stock at its 52 high, the stock is at its fresh life high in trade today. So upbeat commentary, good results, and that's what is helping the stock today. Other than that, it's names like UTI AMC, Aadhar Housing Finance, Muthoot Finance, and HDFC AMC that are at its all-time high. Ultratech Cement also very close to those levels. So these are some of the stocks that are buzzing in trade right now. In terms of sectoral moves, you have a bank, metal, auto, media, realty, energy that's doing well. In fact, energy has just slipped to the red. On the flip side, pressure, deep pressure on PSU banks, FMCG, IT, pharma. These are some of the stocks that are not doing well at all. But let's take the conversation forward with Aditya Agarwala, Head of Research and Investments, who's joining us on the show. Aditya, hi, good afternoon, and thanks so much for joining us. Give us your sense on the kind of recovery that we've seen on the market today, because we didn't open on a very optimistic note, but slightly before the midday mark, we've seen the recovery, and we are looking good as of now, at least holding above the 25,000 mark. Do you believe we can close above that 25,000 mark, given we don't see any surprises from Eternal's earnings if they come in market hours?
Good afternoon, Sneh. Good afternoon. Thanks for having me on the show. I think markets will close about 25,000 mark. I don't see any negative reaction as of now as we speak on the chart setup that tells me that markets will close below 25,000 mark. If anything, I think market can close closer to about 25,100. That is what I'm eyeing, and markets can inch closer to that. Market's more of a consolidation thing, nothing much to read about it. We've seen markets time and again enter into this narrow consolidation phase from there. Indices continue to oscillate in that consolidation phase. As of now, the consolidation phase that we're talking about ranges between 25,200 on the upside, and on the downside, 24,800 is the lower end of the zone. So my sense is markets will continue to oscillate in this zone, and as we move ahead, markets could slightly inch closer to 25,100, 25,200 in a couple of trading sessions time. And for today, my sense is Nifty is going to close slightly above 25,050 mark and more closer to 25,100, because a lot of open interest on the put side is also getting built up at around 25,000, 25,050, which tells me that there is good support around that area, and markets will slightly close above that. And in between all of that, I think so metals and bank Nifty is something that will drive the markets higher, especially led by the private sector banks and some of the metal packs.
Right, so the metal and the banking pack can actually take the markets higher. But for now, the consolidation continues on Nifty 50. That's the call coming in from Aditya. But let me also welcome on board Ruchit Jain, who is the Vice President of Equity Technical Research and Wealth Management, Motilal Oswal. Hi Ruchit, good afternoon. Great to be speaking with you. Help us with your take on Nifty Bank, because yes, Nifty 50 is managing to be above that 25,000 mark, but isn't the move on Nifty Bank a bit surprising, Ruchit, given the fact that we did start the day with HDFC Bank and ICICI Bank? Those were the heavy lifters, but on the flip side, Select's financials are not doing well today. Help us with your take on Nifty Bank, and can we actually cross that 57,000 mark on this?
Yeah, hi, very good afternoon. Well, I think today's up move has definitely been led by heavyweights such as ICICI Bank and HDFC Bank. And if you look at the positional chart structures, then both these heavyweights are hinting at a continuation of the uptrend after some consolidation. So this indicates that the price-wise downside seems to be very limited in the Bank Nifty index. 56,000 on a positional basis, where the 50-day exponential moving average is there, is a good support for the Bank Nifty index. And today's low FEC was around 56,250 itself. So I think we are not far from that support level. So hence, we believe that downside should be limited in the Nifty Bank Index, and we should see a gradual up move in the near term, where the next resistance would be around 57,300 to 57,400 range, where mid-July swing highs were made. So I think we are still in that consolidation or a time-wise corrective phase. It was just that the markets were near the support end of that range, and we saw some good numbers from heavyweights such as ICICI and HDFC, and hence we have seen this reaction where the index could extend gain towards 57,300 to 400.
Okay, Ruchit, so that's your take on Nifty Bank. But on that note, we'll step into a very short break on this edition of Closing Trades and keep the conversation going with our experts on the other side.
Back to Closing Trades right here on ET Now, and let's get you some of the other news flow, wherein the government could mull increasing the capex target this fiscal in order to spur demand and manufacturing activity in the country. My colleague Prakash Priyadarshi is here with the exclusive details on this one. Prakash, over to you.
The government seems to be a bit about the decent pace of capital expenditure in the current financial year, and therefore Finance Ministry is looking for new growth drivers of the economy. In fact, sources are indicating that the overall capital expenditure target may increase to as per demand in the economy in the current financial year. In fact, discussion has been initiated with various ministries to assess potential capacity. Sources tell us that the Finance Ministry is evaluating capex growth with various departments and ministries such as railways, road transport and highways, ports and shipbuilding have been growth drivers for capex, and that could be expanded to a new segment like urban infrastructure as well. So that's an important development coming in. Sources have confirmed that the maintaining current pace of government-led spending and achieving higher growth would be a priority for the government at this point of time.
Okay, so that's the word coming in, an exclusive story on that front. But let's also welcome Mr. Nitin Raheja of Julius Baer Wealth Advisors joining us on the show. And hi, good afternoon. Nitin, also give us a sense of where you are seeing the markets headed right now. So much at play. You have the tariff overhang, earnings, sector churn. So much is happening. Now that we have, for now at least, crossed that 25,000 mark, do you believe that after the little bit of consolidation that we've been seeing for the past couple of months, now the Nifty could break out and now maybe we're looking at better days ahead? Could you please unmute yourself, Nitin?
Okay, sorry. So if you really go by the Q1 earnings numbers that have come so far, it doesn't seem so. It does look a little challenging for the Nifty to break out, at least in the short term, from the band that it has got into, because I think the first quarter earnings are probably going to be the most challenging as we go ahead. And I think this recovery is going to be more back-ended. I just heard on your news channel about the government contemplating on increased government spending. I think that's clearly a sign that the government is worried that growth is faltering. All supply side measures in the form of liquidity in the economy, lower interest rates, tax cuts that have happened are all having a back-ended effect. So I think the government wants to front load that through spending, which is what we are seeing. So I think Q1 is going to be challenging, and in that sense, it's going to be a little more challenging for the Nifty to break out, given the valuations at which it trades.
Point taken, Nitin. Hi, good afternoon. This is Shrishti also joining in. But Nitin, for the past couple of months, rather, the big theme that everybody was literally latching on was the financials. And this time, help us understand that how are you looking at the numbers, because we have the numbers coming in from the heavyweights, HDFC Bank, ICICI Bank, though not a great set, but markets are finding some resilience, while the mid and smaller banking names, they haven't performed as per the mark. What is that you are looking within the financials? Any particular space that is looking good to you?
So when you look at the financials overall as a sector, right? So in a scenario where liquidity is ample and you had this front loading of interest rate cuts that happened, there's naturally going to be a compression in margins. However, the ability of big banks to absorb some of that and yet have levers within themselves to be able to sort of overcome that short-term margin compression is far better. And we've seen the larger two banks, private banks that have declared numbers. They've actually been well received by the markets, and they've been sort of very positive numbers as such. Some of the mid-tier banks will, in the next 2 quarters, see the impact of this margin compression take place. Having said that, if this is a front loading of cuts, the next year we should see banks do well, because on a credit on a low base, that is sort of followed through by the fact that as credit offtake will pick up, as well as the compression and margins will be behind, we should see earnings growth come, and the valuation at which some of these banks trade is interesting. The other element is the capital market players. I think that continues to be a space which is seeing resilient flows. So whether it's the asset management companies or companies who provide services in the capital markets, that's another space which is doing well. In the intermittent, I think NBFCs are the initial beneficiaries of the rate cut, and they should show good numbers over the next couple of quarters. So I think as a space, it looks very interesting. The space has done well in the last 6 months. It's been one of the best performing sectors, and I have reason to believe it should continue to do well.
Nitin, that's your take on the financial space entirely. But I know it's difficult to predict what's going to happen once the tariff announcement is out, but the market seems to be finding some hope of resilience, even though we still have that entire tariff overhang play on our markets right now. What's your take on what could happen? Where do you see the tariff deal going? Pure on a speculation basis, but what could be the outcome, and which sectors could be very adversely affected?
So right now, I think the markets are more hoping that the TACO trade plays off once again. as it has done so in the last few months. But at a larger level, if you look at the whole tariff trade impact, it's been widely put at anywhere, with the exports to the US being close to 1.8% of overall exports. The total impact is expected to be, somewhere between 0.15 to 0.2% on GDP if it were to form, at the previous trials. But I think it's going to be more likely much lower. So I think the tariff news and what happens is probably going to be a moment where markets whose valuations are in fair and in certain pockets, high zone, we'll see those areas and stocks correct much more compared to other pockets of the market. So I think it will be a buying opportunity if you ask me.
All right, that's the take coming in on tariff. But Nitin, apart from select sectors that we have just talked about, help us understand that are there any pockets where you believe that the valuations are still reasonable, or if one should not expect a very great sort of a return from these levels, but can start accumulating in select pockets?
Look, I think overall, if you look at the market, except for financials where valuations are, very, very fair and in good territory, most of the market, if you take whether it's the consumption plays, which is the largest chunk of plays, or even if you take capital goods or infrastructure plays, they're all very well priced. However, since liquidity flows in the markets have been so robust, as well as the fact that, in the short term, I believe infrastructure and capex is what is going to drive. Over the next 6 months, if you ask me, it's going to be consumption, which is going to be the next leg of story, because I do believe post the festival season taking place with a good monsoon behind us, we should see a revival of the consumption story into play. But are they cheap? Answer is no. In fact, the scope for disappointment is very high out there if there is a disappointment in terms of earnings growth.
All right, so those are the select pockets that one can really look out for. But amidst this, the markets are moving higher because we are indeed at the day's highest point for Nifty as well as Nifty Bank as well, which has now surged more than 650 points as we speak right now. Select counters continue to do well, but within the autos, stocks like M&M, they have been actually breaking the range for themselves and inching higher. And selectively, Aditya, if I can have your take on M&M specifically, because of late the autos are taking a bit light when it comes to the stock movement, but M&M has been an outperformer and we are seeing that the stock is once again on the up move. Anything in particular that you are looking with respect to this counter? Aditya.
Absolutely, Srishti. In fact, this is one of the recommendations also from my end. Stock is into a fresh all-time high territory, a fresh breakout from a trendline resistance. And if anything, after the launch of Tesla and the pricing that they have started with, I think there's nothing negative for the stock M&M, and which is why it's broken out into an all-time high territory as well. One can initiate a fresh long position in M&M at current levels. Look for a target of 33.60 on the upside with a stop loss on the downside at 31.80. I think Mahindra is one stock which can be bought, held in the portfolio, not only for trading perspective, but also from an investment perspective, though one can still buy it from a trading perspective as well.
All right, so that's the take coming in on M&M, but on the bottom of your screen you also have the numbers coming in from Eternal, wherein specifically if we look at the profit figure, is just 25 crores is what the company has reported, and indeed a sharp fall from those highest point is what we are seeing on the stock coming in. So that's it on Eternal. The profit figure is definitely taking the stock actually a bit lower, but we will watch out for more internals right now, and the stock is getting volatile a bit as we speak. But along with that, the other pocket that is actually doing well and a bit of a bounce back is what we are getting to see on the life insurance counters, and once again these stocks are on the up move. Select financials have been doing well, and within the IT pack, its persistent systems that is actually higher by almost 4% as we speak right now, given the fact that all these IT majors, they haven't been doing that well. And within the metals as well, we are seeing the stocks are shining bright. Case in point being Nalco, JSW Steel did come out with the numbers. Hindalco and Tata Steel, they continue to do well. Nitin, what's your overall sense on the metal pack? Because of late, these stocks have been doing well, and back home, we have seen all those safeguard duties also kicking in. The companies are now talking about it, and they are hopeful that maybe in the couple of quarters, the pricing can actually come back and they can manage actually to take some bit of a price hikes. Anything on metals that you are liking at this point in time, and how do you see this overall space?
So, metals is a space which is probably tactically poised to do well in the short term. It's actually already done well in the last quarter, but it's tactically probably going to declare good positive numbers in this current quarter. And that's led by a very low base effect as far as pricing is concerned, and also new capacity going on stream. For us, we like to play this more through a value-added products or structural steel, where essentially you are playing the steel demand, but essentially you're relying on conversion margins coupled with volume growth to drive earnings. So we like more of the structural steel players or converters in that segment, where we are not hostage to steel prices.
Okay, let's address numbers coming in from Eternal. We have some more details coming in on the numbers right now. If you take a look at numbers on a year-on-year basis, consolidated revenue is surprising, very positive number on revenue coming at 7167 crores. We were expecting this number to come around 6624 crores on 8.2% uptick versus our expectations, and 70.4% higher on a year-on-year basis. So big beat, but that's all the positivity that we can see as of now from the P&L statement for Zomato, because everything else is a miss versus our estimates. Net profit has come in at just 25 crores compared to our expectations of 105 crores. So big miss over there. It's down 90% on a year-on-year basis compared to 253 crores this time last year. It's largely expenses like advertisement expenses, food and delivery charges. You have other expenses that have inched up almost double on a year-on-year basis. That has weighed on the profitability quite some bit. If you take a look at the EBITDA number, that's come in at 115 crores, which is down 35% on a year-on-year basis. Once again, a miss versus our estimates of 179 crores, and for the margin also, we were expecting 2.7%. The number has come in at just 1.6%, a whole of a percent lower than what we were expecting, in a 260 bips cut on a year-on-year basis. So once again, a miss coming in on the EBITDA margin front as well. What we understand from our first look at the documents, they are going to be incorporating a wholly owned subsidiary known as Blinkit Foods Limited with a share capital of 1 crore rupees, and it is going to be a wholly owned subsidiary. Once it is incorporated, it belongs to the food services category, and it is engaged in the business of providing food services. So that's something new that we are seeing this time around coming in for Blinkit. Of course, once the letter to the shareholders is out, we'll have some better idea about the segmental performance in terms of food delivery, where we were expecting an 18% GMV and a revenue growth. For Blinkit, we were expecting very strong GMV growth as well. So let's see what those numbers look like. We'll have those in a short while from now. But that's the first take on Zomato. I just want to see what the stock of Eternal is doing right now, because while the revenue is a beat against our expectations, you have all sorts of other expenses that have weighed on profitability right now. In fact, the stock is higher. So seems like the street is only focusing on the revenue number for now. We'll have the final print on the segmental performance in a bit, Shrishti, but till then, we'll just see what the stock has to do.
Well, yes, 5% uptick is what we are seeing on Zomato, and that's really interesting to see that the company has incorporated a wholly owned subsidiary called Blinkit Foods right now. Nitin, on the QSR space, any take that you're getting to understand, because yes, Eternal will be a bit of a volatile counter for now, but any reading on the numbers and your overall take on this particular space, because the companies are no more just a food delivery platform, they have expanded into delivery platforms as well, and now a faster food delivery is what they are targeting. How do you see this space expanding, because it has already got a lot of investor interest indeed?
Well, if you go anecdotally from experience that each one of us has, it's only going up in terms of individual ordering that everyone is doing. So I think the whole QSR space will grow. The key question will come in terms of the competitive intensity in the space. I think currently that space is seeing an enhanced level of competition. The hope really is that, and there is a lot of burn that is happening. The hope is that ultimately in all of these businesses, there are only 2 or 3 players who are left. And there is a hope that the existing listed players will be in that top 2-3 bucket. And when that would happen, the ability of these players to price their products better is going to create a huge manifold growth that will happen in profitability on the size that they operate at. So over the long term, we are quite positive on this space.
That's the take coming in on the QSR space. But for now, even after just that 25 crores of profit number, Zomato is holding strong, and now 6% jump is what we are getting to see. But yes, the letter from the management itself is awaited, because every time they come out with a very interesting commentary over there. But meanwhile, let's shift focus to the textile space then, because India is actively exploring the new markets for textile exports, aiming to capitalize on potential shifts in the global supply chains due to higher US tariffs on Bangladeshi garment imports. Sources tell ET now that the Indian government is aggressively pursuing new markets, like a big focus is on Japan for its textile and garment sectors. My colleague Samir is here with more details on this. Samir.
Indian government is constantly pushing for the new markets to increase the export basket for the textile industry, and in the same direction, Indian Textile Minister along with the industry representative met with the Japanese counterparts on 16th of July. What we are picking up from our sources that talks were held with the important Japanese player, whether it be Uniqlo, Pegasus, YKK and similar other prominent name. So from Indian side, they actually pitched with the strength that Indian textile industry has. For example, these are the Indian textile players. They are environmental and social compliant. They can actually match to the Japanese requirement when it comes to the size part. So that alterations or the customization can be achieved. Moreover, that assurance has also been given that if required, then the certain quality parameters can also be achieved, or it can match up to that level. So that sort of assurance was given. Moreover, Indian textile industry has also mentioned that they have got a couple of refined cotton, for example, Kasturi cotton, which can actually meet up to Japanese requirement as well. So that's a very important discussion held, because Indian government understand that there is a golden opportunity to increase the textile export basket to up to $20 to $35 billion. But if you see, there is a significant gap. As of now, India exported to Japan textile worth around $235 million, whereas for financial year 2024, Japan imported textile globally of around $35 billion. So there is a significant market that India can actually tap, and that is the reason that now India is constantly pushing to Japan and other countries as well, so that they can actually explore this market and enhance the export basket as well.
All right, thank you so much, Sami, for getting us all those details. But Nitin, just wanted to have your quick take on textile as a space, because though we have been waiting by to what happens between India and US, but with respect to our neighboring nations, the kind of sectors that India can really stand a chance to win, be it textile, be it some of the other sectors within the pharma space, or even automotive as a division. Do you believe in any of these stories, and what's your overall take within these smaller pockets? Where can one find value?
Look, I think India really has a great opportunity to participate in this whole manufacturing outsourcing story. Okay, and I think textiles is a sector where we actually grow cotton, so we have the raw material and we have the whole value chain with us. So in different aspects, whether it's textiles, whether it's electronics today, or whether it's defense, because focusing on our engineering skills, there is a great opportunity. And I think we will grab a piece of that action for sure, given the focused effort that is going on. I think the key challenges when we talk to most industry people is the regulatory overhang that exists for manufacturing and the amount of compliances that go, which don't make manufacturing necessarily easy in India. Having said that, I do believe that there is a great opportunity to be a part of the global supply chain. I think we will do much better. I firmly believe our potential is far more than where we are getting to. But yes, I think in textiles is a sector where it's a great opportunity for India, given all the challenges that our neighbors are facing and the diversification of supply chain to garner more market share.
All right, Nitin, interesting take over there. But thank you so much for taking the time out and speaking with us today. But other than that, before we should stop, let's have some of the stock ideas from both of our experts. Then they have been very patiently waiting by because we had the numbers, we had the discussions going on. And Aditya, you go first. Tell us which is the stock for the BTST or rather STBT idea for today.
That it's a Mahindra and Mahindra, it's a fresh breakout, as I mentioned, from a trendline resistance. One can initiate a fresh long addition at current levels for a target of 33.60 on the upside, place a stop loss at 31.80 on the downside. The second is from the pharma pack, and we know that pharma has been doing well. Select pharma stocks. Syngene is something which has formed a good base, has broken out from an inverted head and shoulders pattern. I see decent volume buildup as well there. So for a target of 700, Syngene is a buy with a stop loss at 650 on the downside.
And Mahindra as well as Syngene. These are the top buys coming in from Aditya. But Ruchit, what about you? What are your BTST picks?
My first would be buy call in ICICI Bank, where we have seen that the stock had consolidated within a range since last 3 months. But in this entire consolidation phase, the stock did not break its 50-day EMA support. And now today, post the numbers, it just seems to be a resumption of its broader uptrend. So I think this relative outperformance within the banking space is likely to continue. With a stop loss below 1436, one can go long on ICICI Bank. Our first target stands around 1500, followed by 1525. And my second pick would be a buy recommendation in UPL, although the stock has seen a good up move in last half an hour more. It seems that the stock is poised for a decent up move more from current levels, as we have seen a cup and handle pattern type of breakout in today's trading session, and that too accompanied by very high volumes compared to its daily average. I'll just tweak a stop loss a bit. Now keeping a stop loss below 700. I think 700 should be a reasonable stop loss now for this stock. Post this last half an hour move, and on the high side, one can expect target around 740.
All right. So those are the buy calls coming in from both of our experts. But before we let you go, gentlemen, a quick take on the markets for tomorrow, because for today there has been a great move on Nifty as well as Bank Nifty. But are we in to see another gap up start for the Indian markets? How do you see the market open tomorrow, rather?
A very interesting close history, as we were talking at the start of the show, that the open interest does suggest markets will inch closer to 25,100. That's what we are seeing. My sense is market can open flat to slightly mildly positive. I don't see a big bang positive opening in the market or a massive gap down. I see a flattish to mild positive opening for the markets because of the kind of closing that we're witnessing. Clearly above 25,100, it has room all the way till 25,200, where we are seeing the next leg of open interest build up. So mild positive opening for tomorrow is what I expect.
Slightly positive opening for tomorrow, and 25,200 could actually be the stretch where markets can head to. But Ruchit, what about you? What is your take on the market open for tomorrow?
So broadly, I think 24,900, 25,000, this remains a very important support for the Nifty index, because this is the 50-day EMA support. And we have seen in the past as well on previous two occasions, whenever markets have seen such corrections within an uptrend, the 50-day EMA has acted as a support. So till this is intact, I think the biasness should be positive for tomorrow as well. Today, I think this weakness in the Reliance Industries has quite well been balanced by a good rally in the banking stocks. So I think this should continue tomorrow as well. Until this 24,900 support is intact, the price-wise downside seems to be very limited here on.
Okay, so those are the levels to watch out for. Let's thank our experts, both Ruchit as well as Aditya, for joining us. And let's once again put the spotlight on Eternal now that we have the letter to the shareholders. And now we can understand why the stock is doing better despite an overall miss coming in on earnings, because the segmental performance has been slightly better than estimates. And the management commentary in terms of Blinkit's profitability and the margin expansion going ahead is very solid. If you take a look at some earnings fine print, you have food delivery, NOV growth was subdued at 13%, but margins came at 5%. We were expecting 4.3%, so food delivery margins beat versus estimates.